What is your price target for Bitcoin? Because Cardano blockchain founder predicted, as I said earlier, 250,000 by year end.
You know, I will predict Bitcoin. I wouldn't predict XRP. It's too close to home. But I think 200,000 is not unreasonable. I think before I've kind of said, 175 around there. I think people underestimate how the largest economy in the world, the United States, went from headwinds, hostility, to tailwinds.
Do you think that he should give out some of this tariff money as dividends to either lower income or middle income people? Or would you prefer to go to the debt?
I'd like to see it as deficit reduction. I think, many of us are concerned about the size of the deficit, and there's really only two ways of dealing with that. One is growing the economy, right, and two is creating more revenues. So, no, we should be using the tariff revenue for deficit reduction.
Finally, President Trump confirming that there's these two American nuclear subs that were deployed in that region as these drills had ramped up ahead of Steve Witkoff's visit to Russia this week. Here's the president.
On Russia, Mr. President, can you say, have those nuclear submarines been deployed yet to face Russia?
I've already put out a statement, and the answer is they are in the region, where they have to be.
In terms of who's buying cheap Russian oil, we know India's on that list. President not too happy with the way that that's rolling out. I want to ask you about this, though. Zelensky saying that mercenaries from, we had heard about North Korea, China, Pakistan, and parts of Africa are all fighting alongside Russia right now. And then you've got on the other side of the coin, Norway, Sweden, Denmark, and the Netherlands all helping Ukraine. That's a lot of countries now involved on either side of this equation. And then just moments ago, the State Department's approving a potential sale of repair and sustainment support for the howitzer artillery guns. So that's more $203 million coming from the U.S. I know that's a lot, but
our economists believe there'll be no recession. They believe the economy in the U.S. will go about 1.5% this year. They believe that the Fed will not cut rates because inflation will take longer to get down.
That the Fed will not cut rates?
During 25. They'll cut them in 26. And they've been on that for a long time. And they believe that, and even when the tariffs came in, they said, that caused less economic growth this year than they otherwise scheduled, but still no recession.
Our next guest disagrees, saying 2 rate cuts are still coming this year. Let's bring in One Point BFG Wealth Partners Chief Investment Officer Peter Bookvar. Peter, pick your spot in terms of where you would take issue with that view. It's interesting. Both Bank of America and Morgan Stanley saying no cuts this year, and I guess because they figure growth's going to hang in there and the Fed's going to want to wait to see inflation come down. How do you see it?
Well, I agree with Brian that economic growth this year is only going to be 1.5%, if that. That's what we saw in the first half of 2025. The second half of the year, I think, is now in question. And if July's jobs data is any precursor to further weakening, then there's more risk to the downside to 1 to 1.5% than upside. The Fed, to me, they are locked in for the cut in September after they saw the jobs report. And if they don't like looking at the BLS report anymore, all they have to do is look at the ADP report or the employment component of the ISM manufacturing and non-manufacturing reports, and they all still confirm each other. They have every reason, I believe, to cut. But I think we have to. What I want to emphasize, though, is a cut in September, maybe one in December. This is still more rate tweaking. The days of going back to zero are over. So yeah, maybe we'll get a few more cuts, but is that going to be the saving grace to an economy that's still dealing with other challenges like tariffs, for example, but maybe offset by some tax incentives on the capital spending side? But I think net, the Fed is locked in for cuts. It's only going to be a few, but we have to understand why they're doing it. They're doing it because there's been a deterioration in the labor market. And I think you hit it earlier, Mike, when you talked about the stock market sort of weighing the benefits to the markets with those cuts, but on the other hand, trying to figure out, okay, well, they're cutting for economic reasons, and what does that mean for corporate profits in the back half of the year?
August doesn't do well post-election years. When you have a second-term president, stocks have never been higher, right? Down 6 times. So that's just something to think about. But one of the near-term worries I have, get a little technical here, but the number of stocks above their 20-day moving average has been trending lower the last couple of weeks, whereas the S&P has been going higher. That's just some internal things that are saying maybe it's time for a pause, maybe it's time for a break. The reality, though, is this is still a global bull market, not just U.S., global bull market being led by strong earnings, profit margins. We get into some of that stuff. But, just be aware, we've been pretty spoiled, and August tends to be that month. You kind of slip on a banana a little bit, and I think maybe expect some turbulence here sometime over the next several weeks.
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel. And I come back with that video just to make you think. And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have a lot of big predictions on Bitcoin and crypto for the end of this year. Even Brad Garlinghouse, 175 to 200,000. But we know the only catalyst we have for crypto are these altcoin spot ETF approvals. And remember, the Crypto Teacher told you. And then we have Steve Mnuchin. And those who've been listening to me from the beginning, I've done plenty of videos on the best producer in the industry. And we know Kamala Harris let Steve Mnuchin off. And what he said should not surprise you. Give the tariff money to the debt, even though these big banks and big corporations caused it all, not to the people. And you heard it from the horse's mouth. And remember, the Crypto Teacher told you. And we have Trump again on moving ships near Russia. And we clearly see the drums are about to get loud. We have Russia, we have the Middle East, and then also we have China. And we know that is biblical. And remember, the Crypto Teacher told you. And we have Bank of America CEO Brian Moynihan says his economists don't see a recession and no cuts from the Fed this year. And guys, we know we've been in a recession since October of 2023. You can go to the Fed data and see that. The consumers are hurting, but we know they're going to keep spending. The consumer is always in an illusion until it's completely over. And when it comes to the Fed can definitely cut almost a whole basis point, even if inflation starts to tick up. We will still be at 3.5, 3.25. So they definitely have room to cut. So I definitely see them cutting at least 50 basis points because we definitely are seeing a crack in the jobs market, and we know it's only going to get worse. And remember, the Crypto Teacher told you. And when it comes to markets, normally crypto shows us where markets are going. And we're definitely going to start seeing stocks pull back due to these tariffs. Tariffs are nothing but taxes. We know the corporations are going to take that hit, lay off, and then turn to the machines. Guys, remember, this is a plan. It moves in phases. And Trump has to devalue this debt. And of course, all these countries know this. And that means that the dollar is going to take a beating. Yes, it's going to be slow over time, but then it's going to speed up because now we have digital currencies. That means China can push a button and mint trillions. And remember, the Crypto Teacher told you. And we have the bond market clearly becoming more volatile right along with the VIX. And that's going to start to increase as we get closer towards the end of the year. Yes, the bond market is pricing in these cuts, but it's not going to help due to these tariffs. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
I was just inside actually talking with a White House official following this interview, trying to get a sense of what exactly was coming on India and on a few other of the topics that you guys hit this morning. I'm told there's no update, so the president can't say at this point. He clearly hasn't settled on exactly what rate he's going to land on with India, but August 7th is Thursday. That's the day to really look at because all of the some 70 plus countries that got new tariff rates on all of their exports to the U.S., that's when they take effect is Thursday. The president has sort of had mixed views over the past few days over whether or not he's willing to strike more deals between now and then. Canada, to me, is the biggest outlier, is the biggest trading partner that doesn't have a deal and could potentially see a lower rate. Now, India is the next biggest trading partner that could see a higher rate. I'm curious, he had at one point talked about secondary tariffs targeting Russia, and India would be impacted here. of as high as 100%. So are we set to see 125% tariffs on India? That's something that I'm watching for in the next few days.
And Megan, Thursday is the deadline, but then there are other deadlines beyond that for other countries. I think I'm starting to get to the point where I start to confuse them. China is later this month.
Yes, all good questions. There are so many deadlines to keep track of. Thursday is the biggest one. So that's the next on our calendar. Friday is when tariffs on Brazil, I believe, are set to take effect, as well as the secondary tariffs that he had talked about. Those are both for Friday. China has that August 12th deadline. And this is another thing I was just raising with the White House official. You know, there were the Stockholm talks last week, which both sides said went fairly well. The president, again this morning to you guys, said things are going well with China, but we don't know why he hasn't yet extended that August 12th deadline. And we also don't know exactly what level tariffs would ratchet back up to against China if he decides not to extend it between now and then. The White House couldn't give me any further details as to what was going to happen on August 12th, next Tuesday, or as to why we haven't heard anything yet. But that's the biggest question, I would say, after Thursday, is then with China being such a massive trading partner for the U.S., what happens next? We still don't know.
And more about the macro. So one of the interesting things to think about when we think about dollar cycles is they are really long. They're much, much longer than economic cycles, commodity cycles, equity, bond markets. In fact, the average dollar cycle is about 18 years. So the last time we had a dollar bear market was 2002. So I'm old enough to have been around in 2002.
So you're calling this the beginning of the next dollar bear market?
Well, we certainly have seen some signs in that direction. Yeah. I'm certainly not arguing that it's going to continue at the pace that we've seen the beginning of this year, but it is worth large asset allocators keeping that in mind. So if you look at twin deficits in the US, if you look at perhaps recoveries in China, in Europe, in other parts of the world, there are many signs lined up for the beginning of a dollar bear market. We're starting to see some of those really large asset owners, institutional investors, sovereign wealth funds starting to think about looking at other parts of the world. I don't think they're allocating, but they're certainly considering whether they want to have some non-dollar exposure.
To the bond markets, Treasury issuing $58 billion in 3-year notes today, ahead of its record $100 billion auction of 4-week bills on Thursday. The government is pushing to increase liquidity after Congress raised the debt ceiling by $5 trillion back in July. For more, let's turn to Rick Santelli in Chicago. Rick, what are you seeing?
Well, you know, Morgan, you touched on something important, and it wasn't only the bills we're expecting, 100 billion 4-week bills on Thursday, record size. We had bills today. We had 1-year bills today, 50 billion, second 50 billion ever, one in July now, never been a bigger one. We also had a 6-week bill auction, 85 billion, never been a bigger one. And if you look at that 3-year auction, it was 58 billion. There's never been a bigger one. It's the 17th consecutive auction at 58 billion. We had 10 of them in 21 at 58 billion, but never bigger. The point here is size keeps growing or staying at historic levels. Why bills? You know, Janet Yellen was issuing a lot of bills. This administration, before it was elected during primary season, kind of pointed to that as a negative, but they're doing it as well. Why? Because there's this optimistic view that down the road, interest rates going to be cheaper. Coupons live longer, so they're issuing shorter bills because they will disappear and supposedly interest rates will go down. Then we'll issue more. Let's see how it turns out. Prices paid today, a whisker under 70. You see it on the chart. That's almost the highest in 3 years. That changed everything. You heard Mike Santoli earlier? Yes, ISM was weak. Markets paid attention to that, but one market didn't pay attention to that. Short maturity Treasury yields. Look at 2s and 10s on the same chart. 10s kind of ignored it. They were looking at the weakness. 2s went up. It definitely flattened the curve, as you see, which steepened dramatically on Friday. So what's going on? Friday, it made the Fed look like, wow, imminent easing cycle, maybe a growing easing cycle. Prices paid went the other direction. So this is something we really need to pay very close attention to.
Going to a different economy. And we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team Save the Village. Part 2. King Joshua and Drama Team Save New York from COVID-33. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.